opinions expressed by the presenters and guests are their own, and they do not necessarily reflect those of Equitable Bank. This podcast is presented for general informational purposes only and is not intended to provide investment or legal advice.
Welcome back to Equitable Bank's More Bank for Your Buck podcast. I'm Erol Kinkaid, and Phil Wieck is with us, and we've got a new guest today.
The man, the myth, the legend himself.
Market President, old man, Doug Nodgaard. Welcome.
Great to be here.
Glad to have you. We want to start to bring our viewers and our audience up to speed on who Doug is, how he got into banking, and just a quick 1,000-foot view of your banking career and how you got to Equitable.
Okay. Well, I've been in banking for 38 years. I graduated at Wayne State College. And so I've been in banking for 38 years. I've been married for 38 years, and I guess I've been graduated for 38 years. So, and I've been in banking that whole time. My first job out of college was the National Bank of Neely. It was owned by the Dinsdales, which now they've incorporated under the Pinnacle Bank umbrella. I studied banking and finance in college. I saw a gentleman that I thought looked pretty cool at the golf course, and he was dressed really well, and I asked who that was, and they said, that's Bob. He's the president of the First National Bank of Wayne. And I'm like, well, that looks pretty cool. You know, like when you're a kid, and
Sure.
I want to be a fireman, policeman.
Now that's you.
And
Yeah.
So then I'm reading the plaques in the locker room of the club champion for golf, and it's Bob, and I'm like, that's what I wanted to do, and I know that sounds funny, but it really was. And so they knew I wanted to be in banking at Wayne State, and Vaughn Benson, and it was Senator Conway at the time. His first name is escaping me, but they said, hey, here's a phone number. I have to remind the audience, there was no email, there was no internet, there were no cell phones back then. You had a phone number, you called it. And I was they needed a loan officer trainee, and I was in the middle of between being done with finals, and so he said, what are you doing this week? And I said, no, so the next day I went over there, interviewed with him. He hired me on the spot. He called my references right from the thing, John Glant. That was actually Pinnacle's second bank, and it was their most successful bank. I learned a lot from him. I did everything but loans, though, in my year there. I was a teller. I ran a proof machine, balance a general ledger. I was really slow at the proof machine, so they used to have to come and catch me up towards the end of the day.
Tellers today don't even know what a proof machine is.
I mean,
I don't know what a
just
proof
so you're aware.
You encoded the amount of the check on the bottom right, and then when you did deposits, they'd bring in a stack of checks. That's how people paid back then. If you pulled out, there wasn't really a debit card, I don't believe. This is 1984. They'd laugh at you. Or if you pulled a credit card out to pay for your groceries or something, they had a drawer full of checks. What bank do you bank at? And they had these blank checks, and you'd write your name down on there, and they would go through the routing, and then they would take it out of your account. That's how they did business. Of course, I met my wife at Wayne, and she didn't have a meaningful job there, so we decided to move back to Omaha in the spring of 1985. I went to work for First Tier Mortgage. First Tier morphed into U.S. Bank. We had a mortgage company, and I worked there for 3 years doing foreclosures and collections of mortgages. And I always wanted to be a commercial lender, a commercial banker. And so when you applied for a loan or a job there, they would ask you, you got the interview, but if they didn't hire you, then they kind of had to tell you what you needed to do to get that job, sure. What classes, whatever. And so the head of lending said, you have the personality to be a lender. He said, but I want you to be a credit analyst first. Next time a credit analyst position comes open, I want you to apply for it. So I did, one came up, and I got the job, and so I was downtown at the Woodman Tower there for a year, and I wanted to be a lender, and an opportunity came up to go to work for First Federal Lincoln, a precursor of Tier 1, and did equipment loans, over-the-road trucks and trailers, construction equipment primarily. We would do some machine tools and some printing equipment, any equipment that produced revenue, and you really had to learn the UCC Article 9, how to perfect on assets, and worked for a guy named Gary Johnson, still a good friend of mine. I still consult with him, 1 or 2 times a month, and really taught me a lot about how to look for things, common sense things. And then that First Federal Lincoln sold their department to Douglas County Bank, which then became Great Western. And at that time, they didn't have room for me, so I went to work for PACCAR Financial, which is the financing arm of Kenworth and Peterbilt Trucks. So I have a lot of trucking lending background, and I did floor plan loans and then did some fleet loans for them, and for a year. And I didn't like it. It was a national company. Didn't feel like I had any input. Douglas County Bank called me. I actually took a pay cut to go there. It's the second best move I ever made besides taking a job with Equitable. And so I would work there for 8 years. And to be honest with you, it was a little crowded at the top there. It was going to be a long time before I had any promotional opportunities. The gentleman who originally hired me took over at First Westroads Bank, and took him about 3 years to talk me into coming over there, but I finally did. I did enjoy my time. It was Douglas County Bank, and then the name changed to Great Western. We were still a community bank. And, that's really at the heart of my career is a community banker. I continue
and what does
to
that
get
mean
smaller.
when, we use that term as kind of a buzzword in banking, right? Community banking, but share a little bit of your thoughts of what that means to you from your perspective.
Well, on the ride over, I was talking to Erol. One of the most redeeming qualities about working here is that you can pretty much help your customer the way you want to help them. You don't have a lot of red tape. You don't have an administration that's wants everything to fit in this little small box. And you can treat customers the way you'd like to treat them. Some of the larger banks, they have a special assets department. And so if a business struggles, they just take the file and they hand it over to somebody else that doesn't have the relationship, doesn't have the blood, sweat, and tears. As a community banker too, if you make the loan, you also collect the loan. So if there's some past due payments or something like that, everything isn't siloed. And I enjoyed it because I've done every kind of loan, whether it's commercial real estate, professional and executive lending, accounts receivable, inventory financing, equipment, those types of things, working capital lines. So again, that's the fun part about being a community banker, and we have that culture here where Tom, our CEO, and the rest of the loan committee, we all trust each other, and it's been working really well. Our loan quality is extremely good, and so I think we've earned some latitude.
Well, in my mind, when I think of the large national banks, and like you say, they like to silo everything. It's here's your credit department, here's your lending department, so on and so forth. To me, at a national level bank, you might really learn credit really well, but the relationship side suffers because you're quite frankly, you're just a widget in this large machine. Whereas when you get to the community bank level, there's really that emphasis on the relationship. Do you know your customer? Do you understand their business? Do they trust you? Are they going to tell you, things are getting a little tight right now, or geez, we're going to have a great year? And to me, that comes back to that relationship banking and having that relationship with your community banker.
Yes, and there's good people at the larger banks, but they just probably aren't. They're farther away from the decision, and the customer at a community bank is closer to the decision maker and their advocate. And when you're presenting a loan in loan committee, and even at first tier, we were getting to be a pretty good sized bank. Sometimes the loan officers weren't in the meeting where their loan was being presented, and they couldn't say, "Hey, the numbers may not look that good, but here's why they don't look that good, and here's why I think they're going to improve. And so we've had customers that have had some struggles, and then to watch them come back strong and correct some of their things, it's really, it makes you feel good. My favorite movie is It's a Wonderful Life.
Seriously.
And yes, it's about banking, and I cry like a baby every time. But
I've never seen it. Full
You've
disclosure.
never seen
Never
it?
seen
Okay.
it.
Well, it's Jimmy Stewart. His name is George Bailey, and he helped all these people buy their first homes. And back then, there was some slumlords that didn't want them. They wanted them to continue to pay rent, and he figured out a way. The Bailey, and then at the end, there was an accidental loss of money, and bank examiners were going to fire him because they were missing some money, and all of his customers came in at the end, and they all pitched in to make up for the deficit so he wouldn't get fired and thrown in jail. I mean, it's a movie, but
So for those of us that haven't seen it, we'll call that a spoiler alert for It's a Wonderful Life, in case you haven't seen it.
yeah, it's in black and white. That's why I'm Old Man Doug. I love old. I do cherish some things that, and services. I don't want to call it old school because I don't think it ever goes out of style.
Why are you Old Man Doug again? Remind me of that.
Well, in Omaha in 1620, we one of the sponsors for the radio show, and then we also sponsor Big Red Overreaction, and on Sunday mornings now it's Severe Reaction. Michael Severe hosts it. They talk about the game. They talk about the coaching. As we record this podcast, the news of Scott Frost just came in, and so I do. They nickname me that. I call in. I don't call in as much as I used to. Been really busy with the new branch and such, but so they say old man things, I guess. So they nickname me Old Man Doug, which is really funny. It's endearing. I'm good with it. I'm 60, and I've been around a long time, and so I'm a grandfather of 3. So I'm good. Yeah. I'm good with Old Man.
Old Man Doug it is.
And so we'll fast forward a little bit on the career journey, but now almost 10 years at Equitable Bank.
Yes.
As a market president in Omaha, you mentioned our new branch. Just celebrated a year in Elkhorn, but we've experienced a lot of growth in the Omaha market as a bank in all 3 markets that we serve. You maybe share some of the things you're most proud of in the Omaha market under your leadership.
Well, one of the most proud things that I am is our people. Adam Lammers and I worked together at First Westroads Bank, and I was frustrated where I was, and I just happened to have lunch with Shar, who retired from our bank here a couple years ago, and she was a loan processor that I helped train at First Westroads Bank, and I was actually trying to hire her at the bank I was at, and she wouldn't go. So I finally, I had lunch with her and told her I was looking at other opportunities, and then she said something to Adam. Adam called me. He said, "I'd like you to talk to Tom." And you hear a lot of like Warren Buffett, where they make a deal like, at lunch, and they do their diligence, of course. And literally, I think less than a week later, I was working at Equitable. And when you go from one bank to another, they generally dismiss you right away because you're going to a competitor.
Right.
Yeah.
And it's what a wonderful ride it's been, but the most important thing that I do every day is interact with our employees and customers. Good customers, good employees have other options, and believe me, I'm well aware of that. So you're always recruiting, but proud of Adam is really grown. When I took over, I think we might have had $12 million in loans. $2 million was a year past due. Wow. There was some fallout from 2008 and 2009. We did, and actually Adam successfully collected it with interest. It was on some real estate. So Omaha's real estate market's always been good. And Nebraska's economy generally has been good. It makes people like myself look like, we're really smart because we don't have a lot of loan losses, thankfully. Then, I hired DJ and Stephanie that worked for me at the other bank. And I got wind of Erol. And most of them were very willing to come over and work for Equitable, but developing those people and remembering, when Erol came in and, I call him a serial networker. My nickname for him is the Whirling Dervish because he has so much energy. He's got more energy than I do. Of course, I'm old man Doug, right? So I'm getting older and my energy isn't what it was. But Erol has been a great asset to us. So the people in a bank is about people. Right. And you can have all the cherry wood and the marble and the cupola on the top of your branch, but are your people taking care of the customers? And the one thing I remember, Art Bircher, the president of Great Western, or it was Douglas County Bank at the time, and I'll never forget this when he said this. He says, the customer signs your paycheck. Not your CFO, not your CEO, not the president, the customer. If you don't have customers, you don't have a job. Keep that in mind. So one thing that we do in Omaha, I advertise it on the radio. It's very true. If anybody's listening out there, you call during business hours, 402-827-8100. We're going to answer on the first ring. And that's the ultimate sign of respect to the customer. Because when somebody calls, we all have cell phones. We look at them and, okay, I'll talk to that person later, or it's a telemarketer. It doesn't matter who calls. We're going to answer. And that's part of our value proposition because we have an excellent digital banking platform, an online banking platform, but you might be locked out on your password.
Sure, happens to me weekly.
And you could have been inactive, and you can call in. And I tell people we have as much or as little technology as you want. We have a chat feature, and it's amazing. A kid that played baseball with my son moved to Seattle, and on his way out, he said, "Can I still bank with you?" And I'm like, "Sure." And he's a mechanical engineer, and he took a picture. He's trying to take a picture of his bonus check, and it was over the limit. And he texted me on a Saturday morning. This is in December, and this is several years ago. And we've only gotten better on our chat. And he said, "Hey, I'm trying to deposit this $20,000 check." And I text him back. I said, "I'll take care of it on Monday." Saturday and Monday are the same business days. It wasn't like he had a check that was going to clear to overdraw him or anything. And he texted me back about 10 minutes later, and he goes, "Before I called you, I just put in the chat what my issue was, and they already took care of it." And that's on a Saturday morning. So the service, money's all the same color of green. It's the delivery of service. And I've said for a long time, if you're a small business, you probably don't do as well at a larger bank. It'd be no different than us trying to be Union Pacific's bank in Omaha.
Right.
It wouldn't work. We're not set up to be that, and we don't knock on their door, and they probably wouldn't answer anyway, but we're a great fit for those smaller businesses that need some tender loving care and some expertise.
Talk about those smaller businesses, because it seems like for the majority of your career you've been helping smaller businesses succeed, because like you say, the customer signs your paycheck. So if your customers succeed, you succeed as an individual officer, the bank succeeds as a whole. When I think about the national banks, they take care of the big customers. That's who they're after. I actually had to walk into a large national bank the other day as part of an upcoming training I have. I had to do a secret shop of a local bank where I was not known. So I went into a national bank, which shall remain unnamed. But I walked in, the branch was empty. There was two tellers up front, greeted me right away, very kind, very professional. And I can see two bankers sitting over in the cubicles. And my mission was to go in and open a checking account, or at least attempt to, and see what their products and services were. So the teller greeted me right away, went up and introduced myself to the teller and said, "Well, I'd like to visit with someone about a checking account." And her first reaction to me was, "Do you have an appointment?" And I almost wanted to press the issue because I'm looking over my shoulder and I clearly see what I assume are two account representatives sitting there, I'm assuming on Facebook. I'm not really sure. Maybe they were busy. And I said, no, I don't have an appointment. I just thought I'd stop in and talk to somebody. Well, if you can leave your phone number and name, I'll have one of them get back to you at a later time about opening that account. And to their credit, someone did call me back to direct me to their online webpage where I could learn about the accounts. And if I wanted to open one, I could call back and they could maybe help me open an account. So when you say if you're a small business, you likely benefit from a relationship at a small business bank or a community bank. Talk a little bit about helping small business owners succeed. I mean, how do you as a lender help a small, whether they're a startup or a well-seasoned business, how do you help them succeed?
Well, I'll give you an account of an interaction I just had yesterday, and I was talking to Erol about this on the way in, and he's an electrician. He's got 3 or 4 employees, and he's looking to buy a building. And I said, to save time, bring all your tax returns in, your personal returns and such. And I am the beneficiary of 38 years of banking, and so when I'm looking at this, and I generally know what someone can earn as a salary working for a company. And he's a master electrician. You have to be to have your own company. And I looked at what he was paying himself, and I was looking at his revenues. And he actually his mother's an investor, and she's helping him. And we sat down there, and I looked at the tax returns, and I had the 2 there, and I asked him. I said, I started talking about, well, what kinds of things do you do? And I said from the first blush, you're probably not charging enough. And I said, the other weakness, I think, of small business people, which is a weakness and a strength, it's an admirable weakness, is they're too slow to turn if business is down, and they're trying to keep those people employed. And again, most small business people are just great human beings. And so, in fact, his mother said, I've been kind of wondering the same thing. Because I've had electricians where I called them and I had some very small things to do and they just didn't even show up. And you can't, they ghost you. And so I know the supply and the demand is there. So I generally know something about every industry logically, and then I can point out to where, we can actually save them time. And that gets down to the answering the phone part of it. Sometimes it's quicker if you can just make a quick phone call and you say, this is my question. And then it can get answered quickly versus sending an email. And as somebody sending me an email right now, I can't respond. I guess if they were calling me, I wasn't going to respond either. But, just getting back to them quickly, counseling them, asking them questions, asking them, what's your typical customer? And on projections, and I haven't done a lot of startup loans lately, but and Erol has heard me say this too, and I'll say, does your projections make logical sense? They'll come out with a number, and they'll go to, and I'm not going to disparage some of these places that put together projections, but then there's times where I go, did they really ask you a question? And I'll see rent, and I'll just know about what rent should be for a business a certain size and a certain size of building. Mm-hmm. And I'll see that number is wrong, is off. It either is generally it's too low, sure, or it's too high, or insurance. And you just had a customer, and I have a weird memory. I do remember numbers very well, and I remember that this company over here that did $1 million in revenue, here's their bottom line, and here's because every business has competition. Right. And so then you can notice some of that. I had some projections on some restaurants, and I'll relate that, and I'll say, well, what's your average ticket going to be per customer? And then they'll give me that information. I'm looking at the projections, and I said, oh, and how many customers do you think you're going to serve in a day then? And turning tables, whatever, how many tables you're going to have, and then they'll tell me, and I'm saying, well, according to this, you're telling me you're going to serve 100 customers a day, right? An average ticket of this amount. Well, if I'm doing the math right, which I was pretty good at math. This says you're going to do 500 customers a day. And then you'll get that look like,
Oh, no.
oh. And what's the long-term demand for their product or service? Right now, I do a lot of reading, and a lot of it is articles, online and that kind of thing. But, I've read somewhere where somebody said, can your business be Amazoned? In other words, if you're selling goods, are people going to just go out and buy them online because it's less costly? They know what they want.
Cheaper, yeah.
And that's, some businesses are susceptible to that. And we've seen it. We've seen a lot of the big retailers just are going out because some people, not all people, they don't want to necessarily go out and touch or feel something. But there are some products that are really customizable. And
It goes back to value add. I mean, if you're any business, what value are you adding to your product? If you're just selling a generic product at a generic price, Amazon could probably ruin your day. That goes back to the pitfalls of being a small business. What, in your 38 years of experience, what's the one thing that if I'm a small business owner that you see them overlook more often than not, that one pitfall that seems to trip up a lot of small businesses?
Not having enough working capital. And particularly when they're starting out, they'll say, okay, and I'll say, well, how many months?
Now, not to interrupt you there, but working capital, that's a term we use on a daily basis. We understand that.
No, I'll clarify. Cash in the bank, or be able to borrow that off of your line of credit. So if you're a startup business, you wanna borrow the money or arrange to borrow the money before you need it. And they joke, but if you come back after a year to a bank after you lost a bunch of money and you don't have a great plan on how you're going to change that, and you say, well, I need to borrow more working capital, more line, honestly, that's going to be a tough sell unless there are extenuating circumstances, such as COVID. We're looking at a restaurant loan here and actually a residential loan to a customer that had a restaurant, and the building that he was in actually shut down, and he couldn't operate. So you can't really look at that year. You do have to look at some things, but then you look at the personal credit, and he had enough liquidity to take care of his personal obligations. So having that money there or being able to borrow on a line, a lot of small businesses, and it on the surface sounds like a dumb idea, but they get started on credit cards because it's unsecured debt. They probably were a wage earner. Now they're starting a business. And that's
start their business by running up credit cards?
They're using their credit cards to purchase furniture, supplies, equipment, computers, whatever it takes to operate their business. And they're probably borrowing as an individual because you go into a car dealership or something and you're buying a vehicle and maybe you're going to use it in your business and you're going to reimburse yourself mileage or whatever. The dealership doesn't know that. They're going to look at credit scores. And I guess maybe 1A, Phil, would be good personal credit. I can tell you without hesitation, I've had one loan in 35 years of lending that ever went sideways that had a good credit score. And that guy just defrauded a lot of people, and we didn't lose a whole lot on it, but almost every other one their credit card debt continued to be rising. And they don't think it's important to pay, even if it's the minimum payment. It's gonna give you a better credit score. And
well, it's a symptom. I mean, when you see that credit card rising, that debt, that tells you that revenue is less than expenses, because otherwise, why is the credit card debt ballooning?
Right.
I mean, it's a symptom of whatever the underlying issue is, which in a small business would be lack of profitability, lack of cash flow.
And I would say if you've got a borrower or a business owner that is turned to credit cards, it's probably a lack of knowledge about the options that are available. credit cards are so easy to come by. You literally jump on a website. There's 3 or 4 major carriers of credit cards, and you can get them mailed to you within a week. Right.
Yeah.
And there's not a lot of underwriting that goes involved. It's algorithmic underwriting at best. What's a credit score? What's your stated income? Maybe prove to me a direct deposit or something of that regard. And here's $25,000 limit. But when you're in a small business specific example, we're as a lender, we're looking at not just your profit and loss, but we're looking at that balance sheet, right? That's really important. Your accounts receivable and payable aging summaries. There's a lot of data involved in providing direction, providing solutions, providing options to these business owners, and I think that's where we as community bankers add value to the end user. It's using 38 years of knowledge in lending and banking, but the common sense, how does it apply to who is sitting in front of me? Because their situation, although we've seen it 100 times, it's brand new to them, right? And they don't understand, well, what other options are there? I thought this was it. I thought this was the only option I had. It was the easiest form of it. I didn't have a resource that I could just call and bounce an idea off of. And so here I go. I've got to make payroll, right? I've got to keep my doors open. I got to make rent, all these things. And so the path of least resistance.
Well, it goes back to the relationship too. It's a lot of times I sometimes get the feeling that customers can sometimes be reluctant to provide, like you say, 3 years tax returns, personal financial statement, balance sheets, profit and loss, inventories, aging. It is a lot of information. It can be a little bit cumbersome, but that's what really helps to build that relationship with your banker that might be seeing something that, you run your business, your business, but, part of our, responsibility in the relationship is to help you manage the financing piece of it. And the more information we have, the better feedback that we can give you as a business owner to say, hey, your receivables are really ballooning here. What's going on there? It's something they might totally miss. And it just comes back having that relationship with your banker that you trust.
Correct. And I guess one AA would be having people that have really good financial information. And they'll complain, what do you need? You always want my tax return. You're always wanting, and of course, I actually even prefer more, a QuickBooks style of their, like we're in September right now. And hopefully I'm not dating the podcast, but you've got 8 months and some change, and how are you doing? I get a balance sheet and an income statement on the Omaha branch every day. And I know I'm looking at our deposit numbers, I'm looking at our loan numbers, and when I see large fluctuations in that, I might say to myself, did a big loan pay off, or I usually know when we're closing a big loan, or deposits dropped, what happened. Then on the expense side, I might see something and I might go, gosh darn it, we're spending a lot of money on advertising or something.
In my experience, business owners aren't generating and reviewing those financial statements as regular as they should be. It could be quarterly, more times than not, it's annually when they get their tax returns. They know how to do the job. They think they know how to run it profitably. I think that just reinforces the importance of it, Doug, and just as a lender, how important that is for us to continue to add value in understanding where are you today, what direction are you moving, right? Because that's important too. Do we have positive trends in the business? Are we negatively trending? What does that look like? And those are things that we review, but we have to have that foundation of really solid financial data in financial reporting pretty regularly. It's a tedious task for me as a lender, but it is at least annually getting that information from our borrowers. And a lot of business owners prior to coming to bank with us, aren't used to providing that information annually.
Right.
They're not. They're just like, oh, why do I got to do this every single year? part of that value that we bring to the table is we're going to review from our vantage point, and we're going to sit down and talk to you about that review.
Well, just like, and Phil, you have kids, I'm assuming, and you're selling all the time, and you're selling your customers. But what I tell them is the more updated your financial information is, the faster we can move. If you have a loan request, if you have an opportunity to buy a piece of equipment from a competitor that's going out of business or something, or from a dealership or something, you can move quickly. Or you want to buy a business, or you want to buy a building. If we're updated on financials, I mean, literally, we can move very quickly. We've done $1 million deals within a couple of days because we are familiar with those borrowers. And so I do have a few that send me, they do a financial statement on themselves, a personal statement every December 31st, and I get that without asking. And as soon as their tax return, they just tell their accountant, please send a copy to my banker. And that's really not that difficult. But the information is more valuable for them because they can make adjustments. Mm-hmm. And I do have a customer, and he's a good friend of mine, and he's had some struggles, and I had the same question to him. I knew what business he was in. I knew that there wasn't a lot of businesses in the same business, and I asked him, are you charging enough? And he says, what do you mean? I said, well, what's your hourly rate? And he told me. And I said, well, what if you raised your rate to this? What would happen? He says, I don't know. I said, have you asked your customers for this? And he's in a business to where they call him and they need him there like right away. So he's got people that are on the bench that maybe aren't working 100% of the time. And you know, he called and he's like this epiphany. He said, no one mentioned that to me. I'll give you an example. This person doesn't borrow, but the person that cuts my hair, I can't get her to raise prices on me. She does a great job, but that's sometimes small business people don't value what they do. Now, you take gasoline, that's a pretty easy one to pick on. When the price of oil goes up and the price of wholesale gas goes up, what do? They raise their prices. And I think small business people sometimes can raise their prices a little bit because people want their services. And a small restaurant, as an example, sometimes you see that they're kind of slow to adjust, but everybody, and they got a waiting list out the door, you know. I think every business, and it doesn't make you a bad person or greedy, but you should get what the market will bear. And if you're providing a superior product or service, then you should be able to charge for it. The legal field, as an example, somebody might say, well, geez, that guy charges $400 an hour. But that person might know the answer right off the top of their head and can get it done in 15 minutes. When the person that's only charging $250 an hour, it might take them a couple hours. Which one did you pay more?
Right. Well, and now's the time. I mean, everybody's asking about inflation. We talk about inflation, it seems like almost daily. People are expecting it. I mean, if you're a small business owner and through the past 2 years, you haven't raised prices. I mean, a lot of wage earners have seen pay increases. A lot of businesses are, the larger scale businesses, they're passing along the cost to the customer because their costs are going up. Right. As a small business owner, your opportunity cost has gone up. Like you said with your example of the electrician, if you could go make X amount of dollars more to work for somebody else, why aren't you raising your prices? And it comes back to that, having that relationship with your trusted banker that, when you kind of, I feel like people get tunnel vision with their business because they're really good at it and they just want to grow that business. They just want to take care of their customers. By having that trusted advisor on the bench and your small business banker, someone like Doug can call you up and say, hey, you're doing a great job. You're killing it. You got great customer, good cash flow, but you could probably raise your prices 10%. And even if you lost 3 or 4% of your customers because they don't value your relationship, they don't value the service you provide them, you're still going to increase your profitability. And it takes that relationship, though.
Hopefully I can tell this quickly, but I won't name the business, but it was a specialty retailer, and it was a husband and wife. They were actually working for another financial institution. They were both making about $60,000 a year with benefits. They decided to open up this little shop in Oakview Mall. And so after a year, which if you're opening a retail business, particularly if you're going to do well around between Thanksgiving and Christmas, don't open in February. You might want to open in October, so you kind of can move up into that. I mean, that's advice I would give. Why are you opening now when most of your revenue is going to be coming in this state? So after a year, they brought in their I said, hey, his name was Rich. I don't think I'm giving anything away. This is 20 years ago. And I said, hey, when you get a chance, drop your tax return off. And so the next day, I wasn't there when he came in and made his deposit, but I had a tax return sitting in there. And I asked him, I said, before he gave it to me, how'd you do this year? Oh, we made $80,000. I'm like, oh, that's pretty good. First year?
First year, yeah.
Pretty good. And so I get the tax return, and I see the revenues, and I see the cost of goods sold. They were a retailer, not a service business. And then their salaries was $40,000, and at the bottom it said 80. Excuse me, it said 40. And so the next day, and I said, hey, I'm not trying to throw cold water on you. I said, I thought you said it made 80. Yeah, well, made $40,000 profit, and we paid ourselves 40. And then I said, how many hours would you say you average in a year, both of you? And they had employees. And he said, well, in Christmas it's more like 80, and the rest of the time it's 40. So he said maybe 50 if you average the whole year. And I'm going, okay. And I said, if you were making this amount of money with benefits, and I made him mad. I can tell you I made him mad, and I tried to diplomatically tell him as best I could. 2 years later, they opened another store at the Crossroads Mall in Omaha, and we all know what happened at the Crossroads. It's demolished. The tenants really struggled there. Just no one was going to malls. And this is before Amazon, okay? And they brought in some partners, and then there were partners with these people, and then they bought their Oakview store. And, of course, 2 years later, they were out of business. Now, my loan was paid back. It was an SBA loan. And I ran into him 4 or 5 years later. And he says, Doug, he said, when you told me that, you really upset me. And I was really upset with you. I was mad. I went back and said, what a jerk he is. And he said, but I want to tell you, thank you. Thank you for the way you looked at this thing, and it didn't make any sense for us to put all those hours in to pay ourselves a lower wage than we were getting before with no stress, and we had benefits and all that. So I do think I bring that to the table. If somebody asks me, and you have to be careful sometimes when you give that advice, because people can get upset with you. Right. But I think people would rather have you tell them the truth and be direct versus pat them on the back and take their money. I don't believe in doing that.
Right. They might not like it today, but at some point in time, they might realize, hey, maybe old man Doug knew what he was talking about. Well, Doug, we really appreciate you being here today. Your wealth of knowledge, especially when it comes to small business, 38 years of banking experience. We're going to have you back some other time. We can talk a little bit more about old man Doug and learn more about Doug.
Thank you. Glad to be here.
Thanks for being with us.
I want to thank our audience for joining us today on More Bank for Your Buck, and looking forward to our next podcast together. Phil?
Sounds great. Thanks, Erol.
My pleasure. Thank you.
The opinions expressed by the presenters and guests are their own, and they do not necessarily reflect those of Equitable Bank. This podcast is presented for general informational purposes only and is not intended to provide investment or legal advice.